we have a couple of questions from the Notion classroom referring to Chapter 8. So, two questions. The estimating net to seller section of Chapter 8, number 2, and also the brokerage compensation section, which is the page before this one, number 3. That one will make more sense if we do this other one first. So let's start with this one. Page 242. Number 2, top of the page under the estimating net to seller. We're going to do one of those kinds of problems. What do we need to accomplish? Well, obviously, when you go on a listing appointment, you want to make sure that that seller knows what they're going to walk away with. They're going to ask you. Seller's going to say, well, that's all fine and good, but based on the price you think my house will sell for, what does that mean to me? What kind of check will I be walking away with? How much will I get if I sell it for this price you're saying that I should sell it for? So we need to be able to do this. This is one of those day-to-day need to know how to do kinds of things in this course. Taylor has listed his house for sale and agrees to pay the listing firm a 5% commission on the sales price. He will need to pay some things. So with this kind of problem, this net to seller problem, we need to make an inventory list, so to speak, and track all the things that seller needs to pay. Seller's going to need to pay off the existing mortgage of $165,500. $165,500 is the current loan balance with their existing mortgage company. Also is going to need to pay a various miscellaneous costs, $2,500, probably closing costs, maybe for some repairs, doesn't matter. They need $2,500 as well as the $165,500. And in order to buy the next house, they're going to need to put down $50,000. That means selling this house that you're being hired to list for them, they're going to need to walk away after paying all their other expenses. They need to have $50,000 left over on the sale of the house you are being hired to list and sell for them. So what $3 amounts do we need to add up? We need to add up the $165,500, $165,500. That's the loan balance to pay off the existing loan. We also need for the seller to have $2,500 available to pay off miscellaneous closing costs. And they need to end up, after paying all of their expenses, with $50,000 left over so they can use that to buy their next house. A very realistic, real-life kind of scenario. Now, what else do we know from the question? We know that the commission amount that the seller is agreeing to pay Taylor is a 5% commission rate. Taylor's going to make 5% commission. What does that mean? 5% of what? 5% of the sales price. Not 5% of the net or any other number, not 5% of what all these things add up to. Doesn't matter to us as brokers what they need to end up with as far as calculating our commission. Our commission is based on the sales price. So let's see how that works. First step, list out the items that the seller needs to pay for and how much they need to get. They need to get $50,000. They need to pay $2,500 and they need to pay $165,500. Seller needs this much money in their pocket at the closing table so that they can pay off these two things and walk away with this thing. What do these three things add up to? $218,000. That is the total of what the seller needs to end up with. What else does the seller need to have? In order to pay you, they need to also end up with 5% of the sale price on top of this $218,000. So the $218,000 is after they pay you. The $218,000, which is the total of these three things, that's what they get after they pay you as their agent. So after paying 5% of the sale price, they end up with $218,000, which they then can pay these three items, well, two items, and then have the $50,000 left over. So now what? A common mistake, which you may have tried already when you do these problems, common mistake is to, at this point, calculate 5% of this $218,000. But the problem with that is It's not selling for the 218. Let's just do it though. What's 5% of 218? We're going to make a little note here and remind ourselves not to use it. 5% of 218 is $10,900. That is not the right thing to do because you're not making 5% of this 218. You're making 5% of some mystery sales price that we need to still figure out. Your 5% is of this higher number. That means you're making more than this 10,900. We need to calculate it off of the right number. How do we do it? 5% is your part of this transaction. You, the agent, are getting 5%. And how much is the seller getting? Seller is getting 95%. Of what? Of the sales price. So the entire sales price, if we look at it like a thermometer, is 100% of itself, right? This is the sales price of whatever it is. You're getting 5% off the top of that. 5% to the agent, that's you. And then 95% that's left over is what the seller is getting, right? Out of that 95% that the seller gets, after paying you your 5, they need to handle this business, paying off those 2 big chunks of money and ending up with $50,000 in their pocket. So this $218,000 is their portion. They need another chunk of money to pay you your 5% commission. So what do? We know that their 95% of the sales price adds up to $218,000, or needs to. So $218,000, write it this way, is 95% of what sales price? This is the thing we need to know. So 218, now let's replace some words with some math symbols. 218 divided by, let's replace the word is with the divided by symbol, is 95% of this magical sales price number that we're trying to figure out. So let's take our 218, divide it by 95%. 95, hit the percent sign and hit the equals, and that tells you that your sales price needs to be $229,474. That's the sales price that you need to sell it for. From that $229,747, they're going to pay you 5%. Now let's calculate what your 5% commission would be on this sales price. The $229 times 5 is $11,474. How much would you have cheated yourself if you had done it the wrong way? Remember back up here when you thought that you needed to calculate 5% of the 218? You would have made $10,900 that way. You would have cheated yourself out of just about what, $600? I don't want to do that, right? We earn every bit of what we make. So let's clean this up a little bit, and I'll go through the steps one more time. Now that I've explained why it works, let's go through them step by step one more time. Step 1, add up all of the expenses that the seller needs to pay. The ones in dollar amounts. These in the box. We can't add up the 5% because we don't yet know at this point 5% of what? Because we're trying to figure that answer out. 5% of the sales price. We don't know the sales price yet. So step 1 is to add up the dollar amounts. Step 2, identify the commission rate. In this case, it's 5% that you're making. Step 3, the 218 divided by the seller's portion of a percentage, or the seller's percent, equals the sales price. Again, the 218 is all of the seller's expenses plus their net that they need to get, the net they're left over with. Seller's expenses plus the net is on top, divided by the seller's portion in a percent, in this case 95%, gives you the sale price they need to sell it for. To accomplish being able to pay, first of all, your 5%, and then their obligations, $165,500 for the loan, $2,500 miscellaneous. And then ending up with $50,000 in their pocket so they can go buy the next house. Flip over a couple of pages in your book and you'll see the answer. Estimating net to seller number 2, they took the $165,500 loan payoff. They added the $2,500 miscellaneous. They added the $50,000 the seller needs to end up with. That added up to the $218,000. Oops. Oh boy. So if we flip over a couple of pages, you'll see the answer laid out just like we talked about. $165,500 is the loan amount, plus the $2,500 miscellaneous expenses, plus the $50,000 the seller needs to end up with. Added up to the $218,000, which is what they need to walk away with after they pay your commission. Now, what's the difference? What's the split between you and your seller? The split between you and your seller is 95-5. The seller is getting 95% of whatever they sell it for. The seller's portion is 95% of the sales price. $218,000 is 95% of whatever the sales price is. Take our $218,000, divide it by the 95%, and that gives you the $229,474. Does that make sense? Let's do another one just to lock it in, and then we'll go over to that other problem. Hopefully that will help. I'm going to make this one up. So in this case, we have a seller who needs to pay off a mortgage. And let's say they need to pay $350,000 to pay off their loan. They have some miscellaneous closing costs and repairs that are going to be $4,700. And let's just add another thing to the mix. They're going to provide a warranty to the buyer just to sweeten the deal, make that buyer happy. Back when it was a buyer's market, we did this a lot. Sellers paid for a buyer's warranty all the time. Let's say that warranty cost $1,000. Also, because you are such a good broker and you're worth it, they're going to pay you a 7% commission. Now, we'll learn later that that's the total commission. You're not probably going to make that unless you become maybe a dual agent. You're probably going to need to split that 7% with the other firm. But that's not the point for this problem. This problem is only concerning what does the seller need to pay, and therefore what does the sales price need to be. But 7% is the total commission going out. Doesn't matter who it's going to. The agent's involved, right? And then the seller wants to walk away with how much money? Let's say the seller wants $115,000 to take and use on their next purchase. 115. Now let's add these up. 350 plus 4,700 plus 1,000 plus 115,000 is a total of $470,700. That's what the seller needs to end up with after they've paid you your 7% commission. You and whatever brokers are involved. So first step, add up the dollar figures. Now, keep in mind, be careful. Don't just add up every dollar figure you see in the problem. In this problem, it's going to work. But some problems, they might throw some dollar figures in there that the seller doesn't need to pay. So you're going to have to be able to know what is the seller responsible for paying. Next step. Step 1 was adding up to this number. Step 2, identify the commission. It's 7%. If your part of the commission is 7, then the seller's portion is what? It's 100% total minus 7% to you. So the seller's portion is 93% of the sales price here, right? 93% to the seller in this case. We're going to take the 470, 700 is 93% of what sales price? If you write it out in a sentence like this and then replace the is with a division sign, then there's your formula that you need. 470, 700 divided by 93% sign gives you the sales price needed of 506, 129. Actually 130 because we're going to have to round up. When you're talking about dollars and cents, it matters about having enough. So 506, 130 is the sale price needed. Now, you sell it for 506, 130. You pay 7% to you. 506, 130 times 7%. So what you and your firm and the other party, the other broker involved, if there is one, you're going to make 7%, which is $35,429.10. And then what's left for after paying all the agents, those commissions, what's left is this 470. Let's try that. If we take this 35,400 from this 506, there's our 470, 700 for the most part. Now that we've done a seller net problem and learned that little division trick, we're going to apply it to this next problem. Sells a Lot Realty has paid its agent $4,500 from the sale of a property where the firm received 3%. So you're the agent and you made $4,500. That's how much you walked away with after your firm took its cut and you and the firm combined made 3% of the sales price. If Sells a Lot pays you, the agent, 60% of the total received, in other words, 60% of the 3%, we'll draw it out in just a second, then how much did the property sell for? Hang in there. I promise you it's not as bad as it looks. Let's start by seeing how the tree of commission splits looks. The tree of commission splits. So we have a total commission up here. Total commission is at the top. Usually, more often than not, you and your firm are probably not also going to bring the buyer. So you're the listing firm. You're on the listing side. It's you combined with the firm. You make a piece of that commission. In this case, they've told us 3%, and your firm is getting a part of that 3%. The selling side is the one helping the buyer, and for this problem, we don't care about them. We don't need to factor them into the equation, but that total commission, whatever it is going to both you, your firm, and the other side. What you and your firm are getting is 3% of the sales price. So whatever the sales price is, you made 3% of it, and then you had to split it with your firm. Does the problem tell us how much of a percent split you are getting? Yes, it does. Right there at the last line, Sells a Lot pays the agent 60% of the total it received. Your firm is paying you 60% of the 3%. So let's write that in. Your part is 60%. If you're getting 60%, what percentage is your firm getting? What's left over? 100% is the total. 60% out of 100 is 40, so the firm is getting 40, you're getting 60. A very typical split, especially for a newer agent. For any agent, really. 60% to the agent, a lot of times 70, 75, 80. Totally depends on the firm and what you work out. Here's what we're dealing with. The problem also tells us how much you made in dollars. You made $4,500. That was your piece you got to walk home with. Your $4,500 is 60% of what? Your $4,500 is 60% of what dollar amount? We know it's 3% of the sale price, but we needed to know what a dollar amount here is. Does this look familiar? Replace the word is with a division symbol, just like in that last problem we did. And now we just plug in numbers to the calculator. 4,500 divided by 60 and the percent sign is $7,500. That is the 3% number. Okay? Right? You made 60% of the 3%, and that equals 4,500. So your $4,500 is 60% of what dollar amount? Just plug it in the calculator. Now that we know how much the total of 3% is that went to you and your firm combined, let's keep on expounding that into a sales price, because what do we also know? We know that $7,500 is 3% of what sales price? Replace the is with a division sign. There's our 7,500 already in the calculator, divided by the 3 and the percent sign. And there's a very real looking price. Looks like a price to me. Sales price of $250,000. You and your firm made 3% of that $250,000. Let's double check that. We've got $250 times 3%, and there's our 75. You and your firm shared 75. And then your part of the 75 should be 60% of that. Oops. And there's your $4,500 as given in the problem. Does that make sense? Let's see what the book shows. Top of the page. They kind of did a little differently. They didn't kind of draw it out logically. They just kind of did a little more math-like. So those of you who are more comfortable with math, you might like this way better. If you are okay with the way I just explained it, then cover your eyes. Don't look at this one, right? So 3% times 60% is 1.8% of the sales price. They took the percentage split to you and your firm, times it by the split of your piece to find out what you as an agent got in a percentage of the sale price. What you made as an agent was 1.8% of the sale price. I think this might be a little too confusing for the average beginner. So again, if this is confusing, just ignore it. Okay, I don't want you to get confused. I like swapping out the word is with a division symbol because I think it's more logical. So if you divide the 4,500 that you're getting in your pocket, divided by what that is in a percentage, 4,500 is 1.8% of what? 4,500 divided by 1.8%, and there's our 250 again. There's two totally different ways of doing this thing right there for you to pick from. Hopefully one of those makes sense. Don't worry about knowing them both. Just be comfortable with one of them and do it that way every time.